Good day, ladies and gentlemen. My name is Bunolo, also known as Dr. B, or the Forex Godfather. I've been trading since 2017. Now, welcome to the Real Forex. I'm a scientist by profession, a nanoscientist, a PhD candidate, and entrepreneur. It's only now that I've decided to start sharing the knowledge and actually start trading full time. Now, what I'll be doing today is just the general analysis, just to get you guys into my world, how I analyze and also how I approach the market. And then as we go throughout we'll start making episode where we target each and everything that I'll be discussing today. Today what I'm discussing is just the general knowledge, so it is more generic and less specific. I'm looking at gold today. Well, every time when I start my analysis, I start on a daily time frame, as you can see there. On a daily time frame. Sometimes I go to a month. Depends on what I'm analyzing or what I'm looking for. If I want to swing, I can go to a month. If I want to scalp, I can go to 4 hours even. Now, I've been following gold since last year August. Yes, it was last year July when it started dropping. Well, first thing I do when I do my analysis is looking at the trends, where the market is going, the market behavior. Now, when you zoom out, you can tell, I would say, the lowest point since 2016 the market has reached was in 2016. And ever since then, the market has never reached a lower low. It's been on an uptrend, which means people have been looking for buying analysis. But then bear in mind that this is a daily chart. Now, the first thing that I do is identify the significant points, the important levels of the market. You can see here the market has been on an uptrend, right? Pushing up. This was 2018 August, going up until 5th of August 2020. Now, ever since 2020, 5th of August, the market has been on a downtrend from there to there. And how do you know? You zoom out. And as I've explained, I only focused on the current price. How do you draw your support and resistance? Your support and resistance is not necessarily a horizontal line like this. I know most people are used to this. Well, even your channel, you can identify your support and resistance in a form of a channel, ascending or descending channel. All right, and then how do you identify this support? Let me just draw it for you. You make sure that your trend line, all right, when you draw it, your trend line touches at least 3 or more touches for you to consider it a trend, because sometimes you can have 2 touches and then the channel is broken, or 1 touch then the channel is broken. You know what I'm saying? And now you clone and put it on the other side. Now bear in mind that the market does not just act. There's a reason behind every move in the market. Now, well, the market touched that level, right? The highest level, then came down to this level. Let me use something to draw so that you guys can follow. All right. The market started there, right? Then touched this level, right? Went up, then touched that level, came down, touched this level, went up, touched that level, came down, touched this level. Now finally it broke out of the channel, right? Then came back to retest. We call this a base candle. Went out, came back to retest, and then went up. Well, traders know that you do not enter when the market breaks out of the channel, only when it comes back to retest and respect that level. However, when it came here, it bounced twice. There was this level and this level, creating a double bottom. The double bottom is known when the market respects a specific point twice. without breaking that level. Now, this level was respected twice in a row, and this is on a daily chart. It was respected on the 8th of March and also on the 30th of March. I bet that the swingers lost their mind, because now the market started pushing to the upside, and you know really how you trade. Now, question becomes, how do you trade a double bottom? Well, this is how you trade a double bottom. Let me just show it to you quickly. This is how you trade a double bottom. When the market comes down, right, go up, comes down, respect the same level, all right, you can, and then goes up, all right, and then comes back and it goes up. The question becomes, where are your entries? Okay, where are your entries? I'm going to put points where you can enter, and I'll explain to you why you should have entered there. Here and here, that's where you enter. The reason why is because this level was respected before, and I bet if you go down here we'll find a rejection candle. If we change the time frame probably to 4 hour or to weekly, we'll find a rejection candle that shows that this level here was rejected. All right, you can use several things such as indicators, you can use candles, you can use several things to actually understand why that level was respected. You can even use the previous price action. Now let's extend this and use price action to actually understand why you're supposed to enter here. There it is. The market was respected here before, here, then it broke out here, then came back and respected and pushed to the upside, then respected again here. So which means it's no surprise that the market is being respected again here. You understand? Now the market pushed to the upside. All right, the market now pushed to the upside. Let me go back to it. I'm losing my grip. The market pushed to the upside. Market pushed to the upside, and now it broke out of the channel, left a candle here. We call this a base candle. It's a very strong candle. It's a very important candle. I'll explain it in other videos. Now pushed to the upside, now came back down and respect a specific level. But it's no surprise that this level was respected, because this level before, when the market, let me just do this, when the market pushed up the first time, now push this down, when the market created this double bottom, which is this one, when the market created this double bottom, it created a level here. All right, created a level here. We call this a neckline. This is a neckline. This right here is called a neckline. Now the market came and respect this level and went up. So when it came for the second time, we're not surprised why it came back here, right? Because this level here before was respected when the market was about to get out of the channel. Now it bounced twice, 1, 2, which is your neckline, then went up. However, there's another opposite double top, which is 1, 2, went down. The reason I'm doing this is because I want you to understand how I came about the current analysis. You need to understand the history of what you're dealing with. You need to go back and know and understand the nature of your pair. So the market had a double bottom and then double top, then pushed to the downside. Now the market started pushing to the upside. All right, if you can see here, there's a specific layer, there's a level here. I call it a level of, it's a supply and demand, but I'll explain it another time. That's when you use institution trading, the method used by banks and other big institutions. All right, so the market went down, came back and respect this level, then push to the downside, then went up again, respect the same level, then push to the downside. The confusion with most traders is that now they're starting to wonder what is going on. We thought the price went out of the market, went out of the channel, came back to respect, and now it's going to push up. Can be very confusing. The way the market gets out of the channel, it's very important. That's where fake outs come about and people start to lose money. Look here, the market went out and came back inside. You understand? You don't decide what the market does, you follow what the market does. Now, we are here now. All right, we know the history now. Let me just, I prefer my chart clean. Now we are here. We know there was a channel, we know there was a double bottom, and we are here. And we broke out of a channel. However, the market is failing to push the upside, and the bulls are fighting to push to the upside. Now, we expect the market. There are two possibilities here. Understand? And the reason I say possibilities is because you do not decide what the market does. The market decides what the market does. Damn, that sounds important. That sounds smart. So the market respected this level. All right. Some have already sold here. Some are waiting for the market. Now let me just show you the possibilities that are going to take place here. The market is going to push down here, come back, respect this level, then push to the upside, come back, respect this level, then push to the upside. All right. Another possibility is that the market will go down, come back, respect this level, and then push to the downside. That's another possibility. And why do I say there's a level here? I will show to you just now. Look, there's a significant level here. It was respected, pushed to the upside, came back, respect, pushed to the upside, came back, broke it, then broke it to the upside again, retest the bed, then pushed to the upside. However, I'm bullish, you know. I love buying. I really love to buy, you know. I'm a buying person. So according to my understanding, because I've taken the trade as well, but this is just for scalping. I mean, this is just for swinging. Now let me show you, if I was scalping, what I would do. I'll definitely go down to a lower time frame. I would go down to a lower time frame. However, my channel should still be intact. Go down to a lower time frame, which is 4 hours from daily, and then I duplicate the same thing. There it is. However, if you notice here, the upper side of the channel, which is your ascending resistance, descending resistance, has been compromised. It was broken out of, came back, retest, then pushed to the upside. All right, and then came back, retested again, pushed up to, and then it was broken and then pushed up. So it's been compromised. I don't really take it into consideration at this point. I need to draw a new channel. I need to draw a new support for me to understand my market. You understand? Analysis, guys, it's not what you think is going to happen. It's what the market is going to do. So you need to respect the market. You need to respect the market. Okay. So now I have 3 touches now. 1, 2, 3, 4 actually. All right. And the market is moving. Now I'm gonna duplicate this as I did in daily time frame. Voila. And do you see that when it comes to analyzing the market, you only have a clearer vision when you give your market the meaning, when you give price action the meaning. It's like when you walk in the building, you know, if it's just a big hall into several rooms, you know, adding the stairs, now it makes sense, like, oh, this is actually a house. But if you walk in there, now there are no walls, there are no windows. So here you're actually creating. And guys, by the way, I'm only analyzing this as I go. I didn't do this before. So the market went up, respected level, came down here, respect this level, and pushed to the upside, came down, pushed to the upside. Well, there's an impulsive move to the upside, right, to the downside. Corrective move going up, impulsive move to the downside, corrective move going up. However, when it got here, it respected this level here, then pushed down and broke out of it, then came back. Now we believe that the market is respecting this level. So some traders will say that no, we are looking for buy analysis, for buying opportunities. Why? It's because the market has finally broke out of a channel and came back. Sometimes you can have fake outs. Sometimes we may have fake outs, and I will discuss that. How do you know that it's a fake out? How do you know that it's actually important? And now the market is coming here. Now I want you to tell me in the comments, what do you think is going to happen? Do you think it's going to go up? Do you think it's going to go down? Pause the video, do the analysis, and come back to me to watch the video. All right. Now what I'm doing now is that I'm going back into the channel and analyze the channel within the channel. Now if you can see here, this is a corrective move when just pushing up. There's a channel within a channel here. All right. The reason you are doing this is to get a clearer vision of what you're dealing with. And I'm bad with you, and I can guarantee one thing out. It came back to respect this level and push down. And how do you see this? You may not see it on the current time frame, but if you go to a lower time frame, the vision becomes clearer. And I feel like I'm exhausting my time, and like I'm taking too much time with this video, and I didn't want to do this. Let me just show you this point before I can end the video. Now the market broke out. You can see broke out of the channel, yes, broke out, came back, retest, and pushed to the downside. Now similar thing is happening here again after the impulsive move to the downside. Do you see how clear it becomes, bruh? The more you go deeper, the more you dwell into your analysis, like everything becomes clearer and clearer. And now you can make money, because trading is not really about taking trades. It's about the ability to analyze before you take a trade, because taking a trade is just one click. It's like 1% of what you do. 99% of the work goes to analysis. All right. Now we are here. The market has broke out of the channel, pushed to the upside, came down, consolidated, just relaxing, and then pushed to the upside, then came down. And when it comes down, there are specific levels in supply and demand trading. There are specific levels whereby you know where the market is gonna turn. There are specific levels, and for you to know those levels, you will need to continue watching my videos. Now at this point here, there are two possibilities. This market may go back into the channel. And why? Because there's a consolidation here. It's a consolidation here. The market pushed to the downside, is consolidating. It might go back into the channel, or might respect this significant level here. Because guys, a rejection level or support and resistance is not a line, it's a zone. So it might come here, push to the downside, respect this level, then go back. You know what I'm saying? Continue going up. Because in a bigger time frame, this just broke out of a channel, but the way it breaks out and the behavior of the price action after it breaks out of the channel, it's very imperative. It's important, because once the market breaks out or the price action breaks out of the channel, the way it moves will tell you if it's a fake out or it's actually moving now, like we are creating a new trend. And I will explain that as we go, as we grow together. And so what we're gonna do now, for swingers and those who are looking for long-term trading of gold, you need to wait and assess, because patience is virtue. It's better to wait 2 days and then make 2,000, or 5,000 or 10,000 or 100,000 than to be impatient and then lose 1 million. You know what I'm saying? Okay, now right now what I'm looking for is here, I'm looking for a sign. Because I like swinging gold, because I know when gold moves in a specific direction, it moves for a very long time. I don't really like to scalp gold, so that's why I did this analysis. Now if you want scalping, I'm gonna do US 100, I'm gonna do other pairs to show you how. With my analysis, I use several factors. I don't use one thing. No. And I'm going to tell you what. Yeah? The first thing that I've used here, I use candlesticks. The second thing that I used Forex patterns. I use top-down analysis. I used time frames. I used basic information such as specific levels. I used support and resistance. Resistance and support, yeah, still the same thing. You know what I'm saying? I use so many things. I use supply and demand. That's when we are talking now about Abu Quasimodo. We are talking about other things that actually affect the market. Yeah. So basically, guys, what I'm doing now is that I'm done with this video. And until next time, tell people to subscribe, because I'm about to break this open. Trust me, I'm about to break it open, man. Like, I'm about to break it open. I've went deep into gold that I've ever done before, and this is just the